What's up, Stock Up fam? What another crazy, wild day in the markets. Let's talk about it. So as you know, it's been another volatile day in the market. The video I did yesterday, I told you guys to buckle up. It's going to be a volatile week. Right off the back, I'm going to tell you, do not have FOMO. Fear of missing out. FOMO has cost me more money than anything. It has cost me more losses in the stock market than anything. I can tell you in 2008, the biggest mistakes I've made was that fear of missing out and getting in too late, right? And so I don't want you guys to have FOMO because you're chasing a bull. You'll never catch him, right? And then a bear turns around and murders you, right? So we don't want to be hogs. Hogs are fit to be slaughtered. So, but there's one segment that actually did well. Those are SPACs, special purpose acquisition companies, SPACs. As a matter of fact, this morning at opening bell, I had regained all of the losses that I had of last week because of two companies, LCA and Hyliion, or Shell Tortoise Acquisition. Those two companies brought me green alone because of my positions in them. And what do they have in common? SPACs. They all did good today. Just about all of them. LCA, Nikola, LCA's SHLL. I didn't check on NEO, but you got a lot of the SPACs. They all did well today because it is appointed a date of an acquisition, and those are going to happen regardless of what the market is doing, right? So they're doing good the closer it gets to the actual acquisition. And so earlier I told you guys to hold on to those. They're going to make money, and they're making money. But by the time closing bell happened, I was back down. Not as much as I was last week, but that's the thing of diversification, right? FOMO, fear of missing out, will have you going in heavy on one stock, right? So let's look at the two biggies today, tech, that is leading the way down, and that's Apple and Tesla, right? Let's talk about those two. So I always encourage you guys to have an exit plan, an entry plan, and an exit plan, right? So right now in this current market, you got to play two games. One is chess, because you got to figure out what everybody's doing. I always figure out what the whales are doing, but I also figure out what the newbies and the Robin Hood guys are doing, right? Because they move markets, because it's a lot of shares between the two. Whales are big financial institutions, all right, that could drop 1 million shares, can buy 1 million shares, which will cause the stock to go up, or drop 1 million shares at the drop of a hat, which will cause the stock to go down, right? And the Robinhood are mostly newer. They've opened up 10 million accounts. They're mostly newer investors that really don't know how to invest, so they buy the hype, which do the same thing, run a stock up and run a stock down, right? So you want to play chess, and you also want to play double dutch. Know when to get in and when to get out. For those of you new schoolers, ask an old head like me what double dutch is. And for those of you males that don't know, ask a female. They'll tell you. It's rope. That rope is turning. And if you don't get in and get out at the right time, you're going to get whacked. And so that's what the stock market is doing right now. So I will tell you, last week, I think I made a video and I said that I was looking to get into Tesla around 350s. It hit today. And I actually saw that it was coming down, and I got in at 348, I believe. And now it went down to almost $3. Like it went down like 308. So it dropped. I'm okay with that, right? Nobody can guess the bottom. Nobody can. And so, but here's what I want you to do leading forward. If you were going to buy 20 shares of Tesla, buy 10. And don't buy those all at once. Buy a few. I only bought 2 shares, right? So I bought 2 shares of Tesla and I bought 2 shares of Apple. Bought Apple at 115, bought Tesla at 348, right? Because I'm like, it's low. And then it dropped down. So we're going to do something called dollar average cost, right? So if you bought 2 stocks at $10, well, I'm sorry, let me back it up. If you bought 2 stocks and they both cost $30 a piece and you bought 2 shares, right? But then later it drops down to $10 a share and you bought 2 more, your dollar cost average is now $20 a share. You do it dollar average cost down, and sometimes I dollar average cost up. And that's what I did with SHLL. And I did it down, and then as it started to run up on the warrants, I actually dollar cost average up. And so it was a good move both ways. And at some point you stop because you let it run. And so that's what I want you guys to do. Don't have FOMO, right? There's still plenty of money to be made. Just think about this. At some point, somebody, especially a newbie, is really going to get in right at the absolute bottom. And they're going to think it's great. But then those of us that's been on the ride down, we're going, oh my God, this is the worst thing ever. But somebody that gets in on the bottom, they're going to say, man, this is the greatest thing because it's nothing but up. So I don't want you guys to be fearful of the market, because what I did in 2008, I got in, I made some runs, I got burned because I had FOMO, and then I just dropped out. I was like, I'm out. And then all of these gains were being made and I was out of the game, sitting on the sideline because I got discouraged, and I'm like, oh man, that's all I'm going to do. That's what our minds tell us. That's all I'm going to do is lose. That's not true. That's not true. That's the enemy trying to keep you out of the game, right? So what you want to do is think about double Dutch. So I set my price, my buy-in price of Tesla at 50. I stuck to that, but I actually got it lower than 50. So yeah, it might go down to 3. It might go down to 3 after hours tonight. But here's the deal. It was at 5 last week ago, post split, right? We do know that Tesla is an innovative company. We do know that Tesla, even post split, is eventually going to be $1,000 a share. So I'm in it for the long run. So you got to think about this. You got to be a swing trader, but then also you got to be an investor, because I don't think we're ever going to see these prices with Tesla ever again, unless they do another split. All right, which will be ahead of the game. I don't think we'll ever see these prices with Apple again, unless they do another split. And these are 2 solid growing companies, right? Tesla got Battery Day coming out. Apple has the iPhone coming out. So I'm good at the prices that I got them at because I cannot guess the bottom. No one can, And so that's what I want you guys to do. And I want you to look, I'm going to provide a link of my earlier video because I want you to hear it. This is what I want you guys to do. If you got $100 to invest right now, even buying on the dip, I'm still telling you with the election coming up to buy with $50 and keep another $50 cash. If you got $1,000, do the math. If you got $2,000, invest with $1,000, keep another $1,000 locked and loaded. For you newbies, for you old schoolers like me that know what's going on, you can afford to take more risk, because what will happen is if there is a massive dip, and we're going through it day at a time, which actually, believe it or not, is less painful than one day, because the sell-off in one day is just astronomical. So it's giving you time to prepare and readjust your positions, right? So what's happening now is it's a correction. After a certain percentage of the market loss, it technically becomes a correction. And I think that the election is kind of pricing in. Remember this about the stock market. It doesn't just reflect what's going on now. The stock market looks towards the future. The stock market always looks towards what's happening. So I think the election is being priced in now. If the election is being priced in now, that's actually a good thing, because at the end of this bottom, which I think by Friday or Monday, I think most of it will be corrected by this week. I think we'll be okay. That's just what I think. Anything could happen, right? So I want you guys to do your own research. You make financial investments based on your own research. I'm telling you what I would do. So here's what I did do today. I bought some Tesla at the strike price that I said I was. I got it written down in my ledger. 115 was my price. And now it went down to 112, a few dollars, right? But I only got 2 shares. But then I also got 2 shares of Tesla. So I got 2 shares of Apple at 115. And then I got 2 shares of Tesla, all right, at 346, right? And it dropped down. It might be 3. But so my strike price was 350 on Tesla. So nobody knows where the bottom is. So what I want to say to you guys is be smart on your investing. Keep everything. Here's the chess part of the game. You have battery day coming. Good news. Yes. Then you got the iPhone with all the eyewear coming out. That's a good thing. Those 2 things are going to cause those stocks to come up. But you also have the Feds. You have the Democrats and the Republicans not having another stimulus check, right? The Fed's not propping up the stock market like they normally do. They're waiting on those knuckleheads in Washington to get it together, right? Then you have the election coming, which the market generally don't like an election like this going from Republican to Democrat, that because they're fearful that there'll be taxes raised on corporations. And the stock market don't like that, regardless of where your politics is. So that's the chess. Now, here comes double dutch. We got to know when to get in and when to get out. And some of you have asked me, should I sell now and buy in? And I hopefully I was able to answer your questions right away, right? So I had Tesla pre-split. I had bought some at 700 and some at 900, but I sold it at 1668. I was fine with that because I was waiting on now to get back in post-split. See, so I'm good. And if you want to lock in some losses and kind of wait this out a little bit, not losses. Let me rewind that. If you want to lock in some profits is what I'm trying to say. So if you're up on Tesla, you're up on Facebook, you're up on Google, you're up on Workhorse, Neo, whatever, and this is a little too much of a bumpy ride, then don't be afraid to sell and take some profits. It's called profit taking. That's another thing that's happening in September. This is profit taking month, right? So for those of you newbies that's in, I want you to stay encouraged and just buckle down and remember, play double dutch, do not have FOMO, and do like I did. Buy one share, then dollar cost average down. If it drops, then buy another share. Let's say you were going to buy 5 shares, right? It's okay to buy 2 shares now. Just see what it does. And then if it drops, 10% lower or 3% lower, then you buy a couple of more shares. It's called dollar cost averaging down, right? And so what's happening is every time it drops and you buy it lower, your purchase cost overall is getting lowered. So you're pretty much lowering your cost with the market. Dollar cost average down, right? It's a good concept. It has made me a lot of money because eventually it turns and it goes up, right? So let's keep those things in mind. Remember, don't have FOMO, but do understand that we are in the pricing of stocks now, especially gold star stocks like, the new tech stocks. There's like Facebook, Tesla, Apple. Those, we're in good price ranges now to be doing some buying, but I wouldn't be doing margin buying right now. I would stay away from margin buying. Just buy the stock. And relax. All right. Hopefully this has been helpful to you to just kind of bounce some things off and make it helpful for your decision making. And like always, I ask you, smash that like button. It helps me. I'm trying to help you guys, and you help me out by smashing that like button. Leave me a comment. For those of you that haven't subscribed yet, subscribe. We're a family of young, old, all ethnicities, all ages, all genders. That's what we are here, and we're a community that want everybody else in the community to make money. I love this Stock Up fam. We see you later.